This is one of the biggest reasons the federal government stepped back in. We're not done yet.
One of the top reasons people go broke, medical debt.
Here's what a lot of people don't understand. A lot of people get these medical bills and they're supposed to be paid by their insurance companies. The insurance companies are paying the hospitals late, what states can't touch anymore. States can no longer create rules about your FICO score will never be the same after this major Trump decision. We got a lot to unpack. Here's what's happening. The new credit reporting rules have now they're about to change. Okay. What the CFPB just changed and how it's going to affect credit reporting nationwide. Okay. So let's go ahead and go deeper into this. Okay. So now here's what happened. For those who don't know, the Consumer Financial Protection Bureau, their job originally was to be on top of banks and financial institutions to make sure that they're not getting over on people. They haven't opened up a case since the new administration has come in. So whether you think that that's right or wrong, they're essentially not doing what they were created to do. However, it is one of the few ways to make a change that you're about to see right now. Okay. The CFPB released a new interpretive rule in October 2025. Okay. So this literally just happened. It replaced and withdrew a previous interpretation from 2022. Okay. The new rule changes how much power states have to create their own credit reporting laws. Okay. Now I know what some of you guys are thinking, well, Calvin, how big of a deal is this? How many changes have states made? Some of you all have no idea how that you guys are in states where they've changed credit reporting laws. Now, there may be some things you like about this, some things you don't, and that's why I wanted to make this video so you guys can see everything. Okay, let's continue. So now here's what it is. The core question: who controls credit reporting rules? Is it the federal government or is it individual states? Okay, is it the federal government or is it individual states? Here's what it is. This rule shifts power back to the federal level. Okay, so this means they're now going to be probably taking things back, but I'm going to show you guys the list of laws that changed as well too through this process. Okay, the Fair Credit Reporting Act, which is the FCRA, they set national rules for how credit reports are created, how they're used, how errors get fixed, which, by the way, the CFPB is supposed to be on top of TransUnion, Equifax, and Experian. They dropped all the cases against them. So that means people are still going to have errors. We'll get to that in a second. Since 1970, it has generally blocked states from making laws that contradict the FCRA. Okay, so now what does that mean? Here's what happened in 2022. In 2022, the Consumer Financial Protection Bureau said that states could create more credit reporting laws as long as they didn't directly conflict with federal law. This gave states more control and made room for state-specific rules. Now, you're probably thinking to yourself or saying to yourself, well, is it what laws have been changed at the state level? That's a great question. Let me show you, because I have the list of all the laws that have been changed since that time, even before that time as well, too. Let's talk about it, because you know what sparked this entire conversation? What sparked this entire conversation was medical debt. And so they're using medical debt and they're saying, hey, listen, we're no longer, let me see if I can move this over so you guys can see it. Okay, here we go right here. So it started with medical debt. Now, New York, they banned medical debt from credit reports entirely. Okay, remember, for those who don't know, and I'm gonna get to this in a second, how Biden said, hey, we're essentially going to keep medical debt from being on credit reports. Then the Trump administration came in. They said, wait a minute, that's not going to happen. We're going to keep medical debt on credit reports. So then the states, they said, well, hold on, let's go ahead and just put this rule in place just in case. So they were already preparing for this to change. Okay, so here's what happened. When Trump says you can't do that, the state says, yes, we can. But now it's going back to The states no longer having power. Let me break this down. So if you lived in New York, they banned medical debt. Colorado, providers must give a 12-month grace period before reporting medical debt. It's not just medical debt. I want to be clear on this, guys. This is just number one. In Maryland, hospitals must screen for charity care before sending medical debt to collections. In Minnesota, they had restricted medical debt from credit reporting during dispute periods. Okay. Now, these state laws directly challenge the credit bureaus. This is one of the biggest reasons the federal government stepped back in. We're not done yet. Student loan servicing and borrower bill of rights. This is several states. What states are those? California, Illinois, Washington, Connecticut, Colorado, and as of recently, New Jersey. What was the change? They created student loan borrowers bill of rights. This required better communication before negative reporting and created state ombudsmen, sorry if I said that wrong, to handle disputes. These didn't change the credit report, but they changed when delinquencies can be reported. This will more than likely get reverted as well. These are state changes that have been in place, whether you knew about them or not. This may roll all of this back. Number three, security freezes became standard. They started as state laws before the federal government made credit freezes free nationwide in 2018. Every state had its own freeze rules. They had fees, timing, and identity verification. But of course, this patchwork led to confusion, and Congress, they essentially unified it and said, listen, we're just going to make this free for everyone. Identity theft reporting and fraud assistance, multiple states. States created additional protections for identity theft victims. Some states require faster blocking of fraudulent accounts. Okay. Others require creditors to notify consumers earlier when fraud is suspected. Examples: Texas, California, and Florida each had their own fraud assistance timeline and documentation. Rental reporting, encouragements. Now, California actually led the way. I don't know why they're not on this list, because I know that was part of their process as well. But states start pushing landlords to report rent to help people build their credit. Okay, so now this may get rolled back as well. I'm going to move myself out the way here so you guys can actually see me. Okay, but either way, and I'll put this up here too so you guys can grab my free credit guide as well too if you guys want to learn more about this and stay on top of these changes. So Colorado, they require housing authorities to give tenants the option to have rent reported. If you live in Colorado, that was a state law change. Nevada, they offered tax incentives for affordable housing providers who reported rent. This was in 2023. So I want to be clear, guys. I want to be clear on this. Let me bring myself a little bit closer. This is why states get involved. Because they can't wait for the Fair Credit Reporting Act to change anything. The Fair Credit Reporting Act is an old act. Okay? They don't make any changes. This is why states get involved to say, hey, listen, things are changing. The economic climate is changing. There need to be some changes in this. Let's keep going. Now, they didn't force the bureaus to report anything, but they did change what data flows through the system. Debt collection laws. Okay, this is, again, these are state level changes that states will no longer be able to make any new changes. And there's a possibility that they're going to revert all of these changes, but we're going to see, because this literally just happened. Several states reduced the statute of limitations collecting on old debts, which impact how long items can appear and be enforced. Okay. Now, before I go into debt collection, let me go back up to medical debt real quick, because there's been a lot of people like arguing about this whole thing. Let me explain to you about medical debt. I know a lot of people are talking about, hey, if you owe the money, you got to pay it. I hear you on that. I hear you. Here's what a lot of people don't understand. A lot of people get these medical bills and they're supposed to be paid by their insurance companies. The insurance companies are paying the hospitals late. Let me say that again. 85% of insurance companies are paying these hospitals late. Nothing has changed. It's been like that for like 10 years. They are late paying these hospitals. Now, I know what you're thinking. Well, Calvin, that hasn't happened to me. I've seen over 10,000 credit reports. People have medical debts. Let me know in the comment section right now if you all have medical debt on your credit report and it should not be there. There are veterans that have medical debts on their credit reports and it was supposed to be paid. It doesn't matter if you're Democrat, Republican, doesn't matter about the politics. These are mistakes. These are errors that are on people's credit reports that was supposed to be paid. There are people who can't get homes, that can't get auto loans, or they're getting higher interest rates. There are people that are being denied because they're getting a brand new fresh collection on their credit report when the hospital never got paid from their insurance company. So this isn't, I get a lot of people are saying, oh, well, people are not just trying to pay their bills. That's not the case here. There are mistakes that are being made by insurance companies. Let me know in the comment section if there are medical bills on your credit report that should not be there so people can see how real this is. Because I know a lot of times we just look at our own situation, right? But there are people right now that are watching this that have medical debts that should not be there. I just want to make sure I went over that. Let's go back to number 6, debt collection laws. Okay. So New York, they reduced the statute of limitation on consumer debt from 6 years to 3 years. Why is that important? Because listen, it's really up to you on your own take on that. But at the same time, you have to understand that who people that's who they were in the past. I don't think that it's right that a person that these things follow them forever. Okay. So that was a good change. There's a chance they're going to take that back as well. These are states getting involved. California, they strengthened the validation requirements before negative reporting. Let me know in the comment section if there's collections that is on your credit report that should not be there. This is why states are getting involved, guys. Okay, they can't wait for these changes. Okay, so again, these rules, they didn't rewrite the credit report, but they did pressure bureaus to remove old and accurate items sooner. Okay, now let's get back to what I put together for you guys, so you guys can understand why this is. And just so you guys know, what triggered all of this was medical debt. And so they're saying, hey, you know what? From now on, states can't make these changes anymore. Let's keep going. I'm not done yet. Hold on. I got more to share with you. Okay. So we got what happened in 2012. Okay. We got that. Let me go ahead and move this out the way here. I'm going to move myself back up here so you guys can actually see me. Okay, good. All right. So now let myself back up. Okay. There we go. Okay. Now let's keep going. Now, different states started exploring different rules. Why is that? Because again, they can't wait for these changes to be made. These changes are supposed to be made just like a little bit faster. Hold on. My screen is acting funny here. Let me escape that. Okay, cool. All right. So now different states, they started exploring different rules. Okay. This risk creating a patchwork of credit reporting standards. So this made it harder for lenders to evaluate credit consistently, harder compliance costs, and more confusion because they didn't know what was going on. Okay. They didn't know what was going on. All right. Next, here's the new rule. Here's the new rule, guys. Y'all ready? Here's the new rule. Let me go ahead and put this down here at the bottom. Make sure you guys go and get that free credit guide as well. Okay, get that free credit guide. All right, so now next, the Fair Credit Reporting Act already preempts most state laws, meaning that federal rules override the state rules. So now states cannot create new credit reporting rules in major regulated areas. Okay, so now we're talking about states in general. Okay. So again, as you can see, California's been heavily involved. New York has been heavily involved. Now, here's what it is too. What states can't touch anymore. States can no longer create rules about what can go into a credit report. So like when New York and California said, hey, we want you to start reporting rental history to people's credit reports. Do you guys think that that's fair? Yes or no? Let me know in the comments. Is it fair that when you pay rent that the landlord or the property management company adds that to your credit report? Do you guys think that that's fair? Let me know in the comment section. How disputes and investigations are handled. How many times have we seen TransUnion get in trouble, Equifax get in trouble, Experian get in trouble, and no one does anything about it? Doesn't matter who you voted for. This has nothing to do with politics itself. This particular is what I'm saying is that this affects everybody. If there's something inaccurate on your credit report and there are old rules, old laws, we all agree that things should be updated. I think that that's fair. Pre-screen credit offers, identity theft processes, furniture responsibilities. Let's talk about that. You guys know about this. There's arguments back and forth about companies putting things on your credit report, collection companies buying them, and no one says anything. No one says anything. Security freezes and credit monitoring for the military. Any info used to make lending decisions. I'm just putting this stuff out there, guys. Do you think that this is fair? Do you think that this is fair? Okay. Now let's continue on. Let me go back here so you guys can actually see it. All right. So now here's the deal. Here's the deal, guys. Why this matters. Here's why this matters. This ensures the credit system stays national and consistent. Lenders want one scoring standard, not 50 different ones. So I do get it. I do get it. They don't want all these states having all these different rules, but that doesn't mean that change doesn't need to happen. Okay. Just because California says, let's do this. Colorado says, let's do this. The only reason why states are getting involved is because no changes are being made to the credit reporting process. That's the whole point of this. Let me ask you this. Let me know in the comments. I don't care who you voted for. I don't care what party you belong to. Do you think it's fair that things stay on your credit report for 7 years? We can all agree. I mean, do you think that that's fair? Do you think it's fair that medical debt that medical debt is on your credit report and it got there because your insurance company didn't pay the hospital? Do you think that that's fair? These are basic questions. Okay. Now, this also reduces the cost of compliance for credit bureaus and lenders. Okay. So again, guys, listen, I'm telling you, you most definitely. So here's the thing. This ruling keeps the credit reporting system uniform nationwide. No surprises, no state by state confusion. And going forward, the courts, not the CFPB, will decide all matters.